With us, Meera Glim, Chief Global Strategist. Is this correction phase, the panic phase that we saw earlier this week, is it over?
No, there's a major headwind here, sir, which is the debt situation. Now, not all debt is created equal. When you start out with low debt, it can have a Keynesian multiplier that's positive, but we're at 105% debt to GDP ratio.
Now, you're talking about the national debt.
U.S. national debt, right? We're going to throw probably another $1 trillion of debt because of the tax cuts. You're not going to get the growth that, I call them the gang of four: Steve Forbes, Steve Moore, Art Laffer, Larry Kudlow, good guys. I know 3 out of 4 of them. But we're not going to get that kind of growth now. We're past the point of diminishing marginal returns. Critical area is 90%. That's what Reinhart and Rogoff have shown.
But what you're saying is the deficit is going up maybe $1 trillion in a couple of years.
More like 2.
Okay, in 2 years. That's a debt bomb. It explodes at some point,
Correct.
and the market realizes that before we get there and will sell off. Is that your...
Correct. Well, the bond market is very forward-leaning. So the bond market already sees this, and the stock market's going to go down because interest rates are going to go up. They're not going up because of inflation. There's not much inflation on the landscape. It's because of this concern about debt, more issuance. Remember, the Fed is burning money. For years, we heard about the Fed printing money. Think of a furnace in the Fed, and they're shoveling money. They're destroying money by reducing their balance sheet. So the impact of the balance sheet reduction is actually greater than the rate hikes, but they're doing both. And this has never happened before. This is completely unprecedented.
Okay, so that's a real problem for the market, and the market will sell off when that hits. Okay, I got it. Now, what about gold? Because, it's not done very much despite this turmoil.
Right.
But you say...
This is the third gold bull market of my lifetime. First one was 1971 to 1980. Gold went up 2,000%. Second bull market was 1999, 2011. Gold went up 650%. Then we had a terrible bear market from 2011, 2015. The new bull market started December 2015. It's already up 30%, but it has a long way to go. This is going to run for years. Now, daily volatility, yeah, it'll go up and down, but gold is going to go a lot higher.
What's the single big reason why you say that gold is going to go a lot higher from 1315 where it is now?
It's the thing we just talked about, which is the debt bomb. In other words, the debt is going to cause people to lose confidence in the U.S. dollar. There are only 2 ways out of the debt, Stuart. We're not going to default. The U.S. will never default. We can just print the money. Right. But that has implications for inflation. That's what takes gold up. So this is 2 sides of the same coin.
Okay, what about Bitcoin? Because that would be... Now, you're laughing. I don't know why you're laughing. Goldman Sachs says cryptocurrencies are going to zero.
Yeah, not zero. Bitcoin has a use case for criminals at $200 a coin, so I can see Bitcoin going to 200 and staying there. That was where it was before this bubble started.
I would have thought, if you're saying we've got a debt crisis coming, the stock market goes down, gold is going to go up. Right. I would have thought you'd say, okay, things like Bitcoin would be a nice alternative investment.
Things like Bitcoin, but not Bitcoin. Actually, the key is your prior guest from Senior Vice President from IBM. IBM and Intel are going to own this space. Intel has the Hyperledger Sawtooth, and IBM has Hyperledger Fabric. These are going to dominate the blockchain. There's some boutiques out there. Forget the coins. Forget Ether and Ripple and all that. Watch the blockchain. Permission. That was the key word your guest used. Permission. That's how you get trust. So instead of doing these clunky math problems, if it costs me $60 to send you $50 of Bitcoin, it's not a good deal for me. So Bitcoin's a dead end as a currency. The speculative bubble we're off the top, and it's going down to $200. Blockchain, or Hyperledger, distributed ledger technology, that's the future.
Fascinating stuff, and you covered a lot of ground in about 3 minutes. We kind of like that. So, okay, Jim, thanks a lot. So we do appreciate it. Very interesting.
Yeah, really interesting.